Bajaj Finserv doing exceptionally well. It has recently crossed 25,000 crores. How would you see that such a transition has created a change into you and into the company which you are serving in right now?
How do we bring to the market products that are quite different from the rest of the market? It becomes much more deeply involved, much more personal as well. You need to be very, very clear, very sharp in terms of why you will create something unique and differentiated. I had spent almost 20 years in sort of a consulting role. The last 3-4 have been much more from an operating perspective.
What do you think are the 5 top pillars whom you would attribute this growth of success?
Every single fund that we launched, we try to bring something differentiated which can help outperform the benchmark.
How do you see your asset management company doing so exceptionally well? Generally, people say that, okay, let's go and invest into the tried and tested companies. But why you? So how do you see artificial intelligence as a buzzword and in escalating Bajaj Finserv altogether to a new level?
We have about 25 crore people who invest in FDs. It's not that India does not have wealth. It is just that we have not really fully discovered the potential of equities.
What are you really excited about? What is the new kind of product which is coming out from your end?
So I think over a period of time, that will slowly start to happen. One thing we constantly focus on, what makes us different.
New vibes, new actions, new colors and new roles. And especially the new people on the show as well. So today we have one of the very exclusive guests. The guest who is creating a landmark into the asset management firms and who has brought the asset management company to a different level altogether. We have one of the very special guests. He is Mr. Ganesh Mohan. Welcome to our show.
Thank you for having me.
It's indeed a pleasure to host you today, sir. So, Mr. Mohan is the Chief Executive Officer of Bajaj Finserv. He had been working with Boston Consultancy Group for 16 years. And after serving it at a very strategic level, he moved to Bajaj Finserv, where he worked at a different level altogether, making Bajaj Finserv as one of the top leading companies. And after that, he came to a specialized role into the Bajaj Finserv Asset Management Company, where he is serving the company for the last 3 years and now taking it all together to a new heights. So for all the investors who are investing your money into this asset management company, a big thanks to Mr. Mohan, because of whom this company is now quite well known, and especially for you guys who knows this company to a great extent is because of the accolades and laurels of Mr. Mohan. So, sir, we'll start the show with few basic questions, which primarily is very, very important for the viewers. And this show is not specifically for people who are looking out for some sort of financial advice, but also for entrepreneurs who are looking out for transitions, who are looking out to make their business grow and take it all together to a different level. And most importantly, what are the challenges and impediments which an individual entrepreneur or which an individual person sees when he is into the transit zone. So with this, my first question, and a very basic question to you, is that, so from the role of strategy into the role of operations, how do you see such a transition? And how would you see that such a transition has created a change into you and into the company which you are serving in right now?
Firstly, thank you for having me on the show. And I would say that transition moving from a strategy to an operating role is like night and day, right? So in a strategy role, you're advising, you are consulting, you are giving inputs from the outside. In an operating role, you own the results. Everything is on you, and whatever happens is either credit to you or you take the consequences of it. Right? So it becomes much more deeply involved, much more personal as well. Now, in this role particularly, I had helped prepare the strategy for the asset management company. Sanjeev, being the kind of promoter that he is, said, "Look, you put the strategy together. Go ahead and execute it." So it was a wonderful opportunity, really, for me to sort of step into a new role completely. I would say the challenges that come with it are also very, very diverse, and they push you in many new areas. Right? First of all, when you're building a company, right, you have to really think about how are you going to differentiate yourself, but also how are you going to get people on board. Right? So when we started, we didn't have a license. I had a PowerPoint deck, and I had to convince people who are stalwarts in their fields, in the industry, very comfortable in their roles, that this is a company that is worth dropping that for and coming over, right? It's not easy. You need to be very, very clear, very sharp in terms of why you will create something unique and differentiated, and what is the proposition for the talent to come on board. Because on your own, you're not going to be able to do very much, right? But once you build a good team, then you can create a significant differentiator. So for me, that was it was a very important phase of my life. So I had spent almost 20 years in sort of a consulting role.
True.
The last 3-4 have been much more from an operating perspective. So I would say it's a wonderful journey. And now I think it's very tough to go back, but it's a great learning experience.
I'm sure with the kind of leadership skills and with the kind of team building and with the kind of gems what you have actually picked up from the markets, that primarily will drag me to the next question. So today you see Bajaj Finserv doing exceptionally well. I mean, in terms of the AUM accumulation, mobilization, it has recently crossed 25,000 crores, making it as one of the fastest growing asset management company in the country. What do you think are the 5 top pillars whom you would attribute this growth of success, growth of achievement, and the growth of accomplishing different heights altogether?
So I think whenever there's a success, right, there are usually many, many fathers, right, for that. And I would say particularly in this region, there would be a lot of, basis for that as well. First, I would say, the brand itself, right? I mean, Bajaj itself is a 100-year-old brand.
That's
right?
true.
Almost, I think every Indian knows the brand.
Every Indian knows
right?
about Bajaj.
All the way from Hamara Bajaj to modern day, how the brand has evolved. So it's something that everybody has that comfort and familiarity with. That certainly matters in a field of investments where people are trusting you with their money. Right? Second, while of course the brand is important, not necessarily the brand itself is going to be able to sell. Right? We've seen many other brands as well that have entered but not maybe had the same kind of growth. So you have to make the best of the opportunity as well. Right? So I would say getting the right team, which I referred to earlier, was also a very critical part of this strategy, right? You have to have a team that believes in the fact that we can build a business quickly, because traditionally in the asset management space, it has always been about it'll take 5, 7, maybe 10 years to build certain AUM, right? And we wanted to challenge that thinking, that entire thought process from the ground up. The third is this is a business of investing, right? So if you're bringing something new, right? What is the reason for anybody to invest in your funds, particularly when you do not yet have a track record, right? The general argument would be, let's see performance, we'll wait 3, 5, 7 years, and then we'll come in to invest. Unless you're bringing something unique and differentiated, right? So that has been our obsessive, I would say, ambition, right? How do we bring to the market products that are quite different from the rest of the market, that utilize very differentiated strategies, different features, so that we're bringing something truly new, truly unique to our investors, right? So we started from the very basics and we said an active managed fund competes fundamentally with the benchmark, right? So how do we bring in strategies that we have seen globally, have seen in other markets, compete well with passive, and launch those as very unique strategies under each of the schemes that we launch, right? So differentiated products as well. Fourth aspect I would say is technology, right? See, technology is an area which I think really helps you scale very quickly, right? And what we were seeing is in the industry, there were still opportunities to use technology which had not been utilized, right? Day-to-day technologies, things like WhatsApp, QR codes. Right? Every Indian now is familiar with these technologies. We use them every other field,
Very true.
but not so much in asset management, right?
Yeah.
So we questioned that and we said, why can't we bring to our investors, to our distributors, these kind of technology tools that help them transact with us far more easier, right? So that I think has also helped. And finally, I would say at the end of the day, it's the trust that distributors and investors have placed in us, right? I think all these 5 things have probably come together quite well. So when you see the output, it's probably not just any individual one of these, but more the combination of these factors, I think.
Correct. Wow. So, sir, my next question will be a subset of this question. So, as you know, that the mutual fund industry in India is growing at a very exorbitant rate. The rate, where you are seeing on a year-on-year basis, as what the regulator tells, that, the number of SIPs, the number of inflows are growing at a very large rate. So, in this gamut, in this segment, in this section, what do you see, or how do you see your asset management company doing so exceptionally well, or why? Because of what are the reasons because of which your asset management company is doing so exceptionally well vis-a-vis the peers, vis-a-vis the passive funds? I mean, everybody is looking forward to investing the money into Bajaj Finserv. I mean, why? What is it making it so glorious, so charming, that people are looking forward for a new asset management company? Generally, people say that, okay, let's go and invest into the old, tried and tested veterans or tried and tested companies. But why you?
If I had to distill it, I would say 3 fundamental reasons for this, right? The first is, the heart of an AMC is its investment philosophy, right? Which is, what does it stand for? What kind of investing do you do, and how do you differentiate on that, right? And I would say among all of the peers, what we've tried to do is we've tried to bring behavioral finance, into the field of investing in a very systematic manner. Right? So we have, of course, we look at the information edge, we look at the quantitative edge as well, but behavioral edge has become quite a central part of how we make decisions that relate to our investments. So we use it both as a lens as well as a mirror, where we try to identify what are our own biases that we try to minimize.
Correct.
And we try to understand where is the market maybe over or underreacted and take advantage of that. Right? So that's one critical aspect, which is at a very, I would say, metaphysical level, right? That what does the AMC stand for? We clearly have, behavioral finance that we've introduced into the field of investing. But, that is philosophy, right?
Exactly.
People don't consume philosophy. Ultimately, they consume products, right? So each of our products as well, what we've tried to do is we've tried to differentiate from the very ground up. See, we had an opportunity, the entire slate was open to us, right?
Correct.
So we actually went and questioned at the very basics to say that, look, when I'm launching an active equity fund, right, I am competing fundamentally with the benchmark, right? So what is it that the benchmark cannot do or passive cannot do? That is what my active funds should do, right? So in each of the active equity funds that we've launched, we've tried to bring something unique which can compete. And these are, strategies that have worked globally, right? We've tried to bring those strategies into each of our funds, whether it is mega trends, which is in the flexi cap, which is a growth-oriented structure, or whether it is moat-based investing, which we brought in the large and mid cap, or concentrated strategies in the large cap, or a contrarian strategy, which we brought in the multi cap. Right? Every single fund that we launched, we tried to bring something differentiated which can help outperform the benchmark. Right? So to me, that's the second big pillar. Right? So fundamentally, have a differentiated investment philosophy with behavioral finance. Second, differentiated products. And the third is using technology to make it very, very simple for people to transact with us. See, one of the feedbacks that we got when we launched this business was, it's very easy to invest, but sometimes it's very difficult to even redeem your money.
Yeah,
right?
That's
true. And while there are platforms, very often, I don't need to, deal with AMCs, and I find it difficult to deal with AMCs, right? So we said, why can we not simplify that? Why should, transactions not be, as easy as, e-commerce?
Yeah.
Right? And we said, rather than having another new app, right? I mean, how many AMC apps will you download, right?
Yeah.
We said, can we not use an app that is available with everybody, which is WhatsApp, right? And can we not have transaction capability there, right? Lump sum, SIP, redemption, non-commercial transactions. You want to get your statement, you can get it at the touch of a button on WhatsApp, right?
Correct.
So all of these things, I think from investment philosophy to product to technology, I think when you start putting all these things together, right, you end up creating a bit of a virtuous cycle, right? And each feeds into each other and really helps, the entire outcome come out much better.
Wow. So basically, you mean to say the behavioral finance at one end, accumulated with the technology differentiation strategy, which could be your mega trend strategy or the mode strategy or the focus strategy. Along with that, technology, which primarily has been the game changer, because of which today what you see or how the returns gets expressed is the function of all these three pillars, which you are basically directing at. So, sir, with this, since you have already hinted over technology as one of the major features, now there is something, a buzzword known as artificial intelligence. The buzzword which has created a furor, which has created a fear at one end of the spectrum, and at the same time, it has worked a lot for a lot of people in the world at different pyramids, whether somebody at the bottom or somebody at the top. Changes in the job, behaviors in the job, the leadership quality, all are going for a change just because of this buzzword, which is artificial intelligence. So how do you see artificial intelligence as a buzzword which will create a differentiating factor in your distribution system and in escalating Bajaj Finserv altogether to a new level? Because when the fields like IT, pharma, or you see robotics, everywhere you are seeing artificial intelligence penetrating and taking away the jobs at one end, but at the same time making things quite easier. You see prompt writers, you see prompt educators, and so on and so forth. How do you see this? It's a very crucial thing, because all of the investors at one point of time are looking forward that their companies should be completely updated when it comes to technology.
No, I fully agree. And I think AI is way beyond a buzzword at this point of time, right? It is actually becoming very, very central to how business will get done, how jobs will also get played out in the coming years. As it comes to investing and let's say from an asset management perspective, right? We've seen AI having an impact virtually on every single function, right? And let me start at the very basics, from compliance, right, to marketing, all of our outbound marketing, all of our, SMSs, etc. The amount of personalization that you can do with Gen AI is phenomenal, right? Going all the way to investing itself, right? Where with a large bunch of, data, right? How do you create more predictive models? How do you utilize the capabilities of AI to be able to streamline what our research analysts are doing? How do you look at conf calls, investor conference calls, and the minutes and the sentiments of those, right? How do you extract what is really relevant? What used to take people maybe 3-4 hours earlier can be done in a matter of minutes, right? So it enhances the productivity of teams in, I would say, AMC's manyfold, right? So now what that does is it actually allows my people to be much more focused on what is more value adding, right, than let's say the grunt work part of their jobs, right? So I don't subscribe to the view that it will take away jobs. It will actually refine the jobs and make sure that you're bringing your A game to the most critical parts of the tasks that you need to do, rather than wasting your effort on things that are not that value added, right? So that is a major change that I'm seeing in our business as well. And I'm actually very, very positive on the impact that this can bring to the field of investing, but more broadly to every sector, quite frankly.
Well, I think it is very important for the investors or for people all across the world who is watching this show. Artificial intelligence is a buzzword. That's very correct. I mean, how artificial intelligence will help in changing the entire landscape at a global level is decided over by the fact that artificial intelligence will take over the mundane activities. It will help in increasing the workforce will become more productive at one end. They will be more involved in the value creation. They will be more involved in doing something where simply through automation, technology can take over or hijack that feature. And that is where artificial intelligence comes up. Data mining, data computation, data vigilance, all of these sections could be well catered to by artificial intelligence. So the human force or the human manpower could be made more productive and value additions could be done. That is what I suppose artificial intelligence would be seeing. And the world would be seeing a new type of landscape change through artificial intelligence, sir?
Very true. And also what I see is, a lot of people have questions around, where will jobs go? What will happen to, freshers? Will there be any jobs for them, etc.? What I actually see is, people who learn to use AI will be even more employable than before, right? So now think of a person who's, early into his career, right? He can actually play the role of almost a mid-level manager with the support of AI, right? A lot of the domain expertise that we used to attribute to people actually now comes through technology, right? So younger people, actually, I see a great opportunity for them to utilize this even more, right? And for people who are more my side of the age, I think it's very, very important that you learn how to use technologies like this, because it will fundamentally help each and every one of us become far more productive in the future.
Yeah, change is the only thing which is constant in this world. At any age of your life, at any phase of your life, probably whether you are a Gen Z, millennials or boomers, whatever you call yourselves, artificial intelligence will not be left untouched in your working style. And with this, sir, I come to the next question. In this world of uncertainties, how do you see the risk and opportunities coming your way in your business operations and into the mutual fund industry in totality, sir? It's very important to understand, because many a times what happens is that, because now the world is so deeply intercorrelated, it's so overly globalized that you have different scenarios. When US sneezes, India catches cold. When Trump says something, the foreign institutional investors wipe away their money from India and park them into their own home country. When there is a geopolitical crisis, for example, the Ukraine war at one end, the Indo-Pak tensions at another end, the people become fearful of the fact whether they should really invest, they should hold the cash, they should move into bullions, they should move into the US treasuries. And at the same time, sometimes, the tussle between the central bank head and the president of a country also leads to a lot of uncertainty into the global markets. How do you see the opportunities and risk getting covered or getting balanced so that the investors feel confident, the investors feel relaxed, the investors feel that yes, that is where they would be able to make money at one end, and at the same time, their goal for which they are really investing the money, maybe it could be for their retirement generation, whether it could be for their child's education, the child's marriage, or maybe it could be even for their vacation planning, can get accomplished. Because all these goals are not dependent on the fact whether the president of a country is having tussles with the central bank head. So how do you see this risk and opportunity getting balanced? Because for the last 7 months, you have been seeing the Indian markets into the bearish phase. And especially for all the investors, or to majority of the investors who have entered the Indian markets post-COVID, they've never been encountering such a downturn phase. For them, it's a nightmare. I mean, erosion of money, principal, within the Indian domestic territories is something which is unheard of, uncharted territories. So how do you explain to the investors, to the viewers, this sense of uncertainty at one end and balancing the risk and opportunity at the other end? And how does your AMC comes forward to handle or to give a vision to such sort of rebalancing activity?
This is a very important question, and I'm very, very positive about the industry. So let me start with the opportunities first, and I'll cover the risks in a little later. So the opportunities, I still see India as probably one of the best opportunities currently from an equity investor's perspective. And I keep telling our investors, we are extremely fortunate that we are born in India, at this time, and that we have the opportunity to invest in mutual funds, right? All three parts of that statement, right, are very, very powerful. First is the India opportunity. India is the only large growing market which almost certainly is giving you at a nominal level about 12% returns every year. Right? That is the earnings growth rate of the Nifty 100 companies. Right? That's also broadly GDP plus inflation. Right? So 12 to 15% kind of a growth rate is something that the market is giving. The Indian banking system is in the best health of its life. We have a GST system which is now very well stabilized. The real estate system has become far more formalized, right? We are seeing a shift in GDP per capita from about $2,500 to about $5,000, right? Which is typically the middle income kind of a classification, right? When that happens, we have seen country after country where this takes place. Significant explosion happens in consumer spending, in consumer discretionary, in financial services, in housing, in automobiles, travel, services. Multiple sectors get significant growth impetus because people are not spending only on roti kapda makan, but they're now going well beyond that, right? So the basics are taken care of. Now you expect a little more. So the opportunity size significantly increases, right? If I look at the market today, we are still, I would say, largely a land of savers, not yet investors, right? The people who are investing in the market today, I would say in mutual funds would be around 5 crores. Even if you put all demat accounts together, it's probably around 10 odd crores, right? Now, if I look at simply FDs, right, we have about 25 crore people who invest in FDs with an average ticket size of about 5 lakhs. So it's not that India does not have wealth. It is just that we have not really fully discovered the potential of equities as a way to create wealth, right? So I think over a period of time, that will slowly start to happen, right? India will slowly start moving more and more towards equity. Mutual fund AUM as a percentage of GDP has been growing, but it is still significantly lower than where it would be even for other developing markets, right? So I see a clear opportunity that is there, and people who've been investors have also seen that opportunity. Coming to your question, in the last year, let's say 6 to 9 months, right? There has been some volatility. People who've been in this industry for a longer period of time have seen times when the markets have corrected even up to 60%, right? In 2008, many people would remember that. Even in COVID, the markets corrected about 30-35%. And very quickly recovered as well. And that's a part which people tend to forget, right? Equity markets are expected to be volatile, right? You must come into that with that expectation. I think what had happened is in the last 2-3 years, before the recent correction, right? So let's say, all those investors who came in at that point of time, they had seen abnormal returns, right? They'd seen 30, 35, some even 40% returns, right? Annualized, which is great, pat yourself on the back, but do not anchor to that expectation that will happen forever, right? Because if earnings are growing at 12 to 15%, valuations cannot be growing at 40%.
That's true.
Right? So at some point, a reversion is bound to happen. Those are opportunities where seasoned investors really make their mark, right? Best investors, I keep saying, are not made in bull runs. They're actually made in bear phases.
That's true.
Right? And I think each of these opportunities, the most seasoned investors are the ones who are actually increasing their positions. It is the more, people who get nervous, panic, decide to sort of, stop their SIPs, redeem. They are the ones who are selling at that point of time. Again, at the wrong time. They tend to go with the crowd, right? Investing requires a little bit of I would say, a slightly different mindset, right? Where you see each of these as opportunities when everybody else is selling. What Warren Buffett said, right? In a very very powerful manner. Be fearful when others are greedy, and be greedy when others are fearful, right? So you have to have a slightly contrarian mindset, right? So I would say certainly opportunity is there. Longer term, this is a fantastic asset class to own. It reliably outperforms every other asset class in the long term, but you have to stay persistent for the long term, right? Now, coming to the risks. Equity, of course, comes with risks. As we said, volatility is one risk, and if you are over-concentrated, that is another risk. So if you only have, let's say, 2 or 3 stocks in your portfolio, that can create a risk as well. The other is, as AMCs, we have to always be aware that we are managing public money. So we are, over, sort of indexed on risk management, making sure that we're doing the right things. There are a lot of strong regulations, I think, in the mutual fund industry, which I think are helpful because when you're managing public money, it's important to manage concentration risk, liquidity risk, credit risk, all of those, and operating risk as well. So from my perspective, I think any of those can create an issue, right? If not managed well, which is why having a professional fund management firm do that for you, right? Is actually a better option, because while technically you could create exactly the same portfolio yourself, right? When you have a professional do that, right, under, let's say, a mutual fund kind of a structure, it's almost like outsourcing something which you could certainly do, but for a certain, for a minimal cost in a sense, you're getting a professional to manage that and handle it very well on your behalf.
I mean, this is how the risk and the opportunities gets balanced. I mean, and to all the investors and the viewers, it's important to understand that equity comes with its own kind of risk. It's not a unidirectional bull run where you will be enjoying the benefits of the fruits all across. Just as Sir rightly said, Indian markets give approximately 12% returns on an annualized basis. That comes in a leaps and bound phases, in the crest and trough phases, in its highs and lows. So what are you actually worried about when you know that your portfolios are bound to go high, Indian economy is doing so well, the macroeconomic parameters and whatever Sir has actually talked about are exceptionally well. Primarily, your portfolios will also go to a great extent possible. And with this, Sir, there's another question, of course, which I'll be putting you into the shoe. Now, the question is, Sir, within that ambit of a regulator who makes sure that nothing goes out of order, keeping into mind your philosophy of mega trends at one end, moat at another end, bringing innovations into the system using technology and artificial intelligence. What are you really excited about? What is the new kind of product which is coming out from your end, which can really excite the investors to a great extent? They can see that, yes, their money is actually getting higher, they are making money, they are accomplishing their goals, becoming more satisfied and comfortable in their life, and looking forward to see something better.
I'm glad you asked, because this is something that we've been sort of thinking quite a lot about. And we actually launched something on this earlier this year. We're calling it Savings Plus, right? Now, this is actually a very simple concept at the end of the day, right? So when you look at your typical savings accounts, right, most people would be earning maybe around 2.5% to 3% annualized.
Correct.
Right? Now, that doesn't meet inflation and it is fully taxable within the year, right? So from a financial advisor perspective, it doesn't make any sense. You would never recommend such a product to your investors.
Correct.
Nevertheless, India has about 20 lakh crores sitting in current accounts and savings accounts, right? Now, this is actually a significant loss at a nation level, right? Because simply if that money had been parked in, let's say, liquid or overnight kind of instruments, the amount of incremental return is close to about 80,000 crores. That's about $10 billion a year, right? Now, this is a problem of a massive proportion, right? And historically, there were reasons why people just kept a little extra in their savings account because you never knew when you needed it and you just wanted to have a little bit of money available whenever you wanted. But with liquid and overnight funds, you actually have the ability to, to actually get that money up to 50,000 rupees is almost instantaneous.
Yeah.
The remainder is, within a day, right?
Yeah.
And most people don't need more than 50,000 at short notice. And even if you do, you would probably use a different payment instrument for that, right?
Correct.
So what we are doing is we are actually utilizing a newly created feature that has been launched recently called Account Aggregator,
Okay.
which many people may not be aware, but it's actually a very useful feature where once customers give consent, right, you can actually look through 6 months of their bank statement data and identify how much surplus money they have been keeping in their savings accounts. Surplus meaning after meeting all of their expenses, credit cards, EMIs, bills, whatever have you, right? And you can also tell them how much they could have made extra by deploying that in a liquid or an overnight instrument.
Correct.
Right?
Correct.
Now, these are fantastic products, very well regulated, very low cost, and these are typically what most CFOs use in India to park their surplus money, right? They're available to retail investors.
It's true.
Why shouldn't they be utilizing similar, products as well, right? So it's a simple way of making your own hard-earned money work harder for you.
Yeah.
And a similar product, when it was launched in China, actually became the world's largest money market fund. Right? Even there, the spread gap was about 3 to 4%. Right? So I am very optimistic that this is something which has an appeal to everybody who has a savings account.
Yeah.
And can actually become a very large way in which we shift from becoming a land of savers to a land of investors.
Oh my God. Even I was not aware of the fact that, China had this feature and which had brought it to at this level of money management. And in fact, looking into your bank account, seeing to it that what extra surplus money you have, how can that money be deployed into the liquid fund, overnight fund, ultra short fund, and you can have an additional alpha as well, additional returns. That is where all the investors should come and see that yes, this is where the money will start making more money for you. Just as it is rightly said that money breeds money. So, sir, with this, I have another question. The question which is too much there into the global politics at an environmental level, at UNDP level, at United Nations, that sustainable investment has also taken a front foot. When you talk about environment, social and governance parameters, not only at the national level, but at an international level, a lot of companies are working together to make their products ESG compliant, to make their services ESG compliant. How do you see your asset management company is really coming forward to create an impact, not only at a psychological level into the portfolios of the investors, but most importantly, at a global level where the ESG parameters are met? So how do you see that, sir?
No, you're right. ESG has become very, very important for, I would say, for investors, but also, more broadly for companies, because, every company has to report on their ESG and the BRSR framework as well. The way we look at it is more from an investment lens, right? So what we look at is, companies that are, undertaking ESG efforts, right? What are the kinds of things that would have an impact on their business parameters, right? So whether it is environmental, social, or governance related, right? What are the specific aspects that, let's say, cause an impact on the P&L or the business outcomes? So, for example, in IT companies, management of attrition actually is a significant sustainability issue, right? For banks, right, it may be actually more about governance levels and the quality of leadership, right? So what we do is we actually have different metrics for different kinds of companies to be able to identify what is the impact of their actions on ESG on their business outcomes, right? And that's how we score companies on their ESG framework, and we adopt that at our portfolio levels as well, right? So for us, ESG certainly is something which is going to increase as well. And it's not only about paying lip service to the fact that, oh, this company is doing ESG, it's got this report and so on and so forth. So that becomes more a checkbox kind of an approach. But really as to how can it lead to meaningfully different investment outcomes, and are they focused on the right things when it comes to E, S and G?
Yeah. So do you really think that by adopting such a principle, you could be having a substantial impact into the returns part also of the portfolios?
Absolutely. So when I said, the ESG should have an impact on the business of the company, right?
Yeah.
Ultimately, that has to translate into the earnings.
That's true.
Right? From our perspective, we are laser focused on earnings.
Yeah.
Right? So whether it is ESG, whether it is the business, quality of management, governance, all of those, right, must translate at some level to earnings, right? And we believe that either if your earnings go up well, or your ability to defend those earnings for a longer period of time, which is your multiples, that's what creates value, right? So we look at both those factors.
Exceptionally well treated, sir. I mean, probably ESG as a factor has also become a buzzword, just like artificial intelligence is. So, sir, with this, I move on to the last question. And I would really want to know that, what are the next challenges or exciting things which you see would get encountered in your asset management company in the next 5 to 10 years, and how are you planning to overcome those things? Because as an investor, people are also more interested in knowing about the management of a company or the philosophy of the company. How would this company turn out to be exceptionally a different game changer altogether on the canvas of investments? And most importantly, I think what is more important is that how is this company literally different from the other companies? So how do you see Bajaj Finserv as an asset management company facing and having some sort of challenges and encountering those challenges and overcoming those challenges in times to come in the next 5 to 10 years?
So at different stages, the challenges become different, right? So when you're starting up, it's literally day one, right? So you have to get a lot of things organized. You have to, sort of create your proposition. You have to differentiate in the market. You have to go out and, get the word out as well. Over the last 2-3 years, that has probably happened to some extent, right? I think for us now, it is about the next challenge, which is about scaling up, right? So how do we, sort of get ready for a scale up? How do we expand our channel partnerships? How do we, build even stronger, sort of customer connects? How do we give people the technologies which we've built? How do we double down and make sure that whatever we've built, people are actually utilizing those, right? So a lot of that, things like WhatsApp, QR codes, etc. And Savings Plus that I talked about. How do we bring that to people and make sure that people are seeing the full benefits of that, right? But I would say within the company level as well, right? One thing we constantly focus on is, as you mentioned, what makes us different, right? What is the farak in Bajaj Finserv AMC, right? Whether it is at the investment philosophy, whether it's products, whether it is technology, each of these, we intend to stay as a day one company, for a long period of time, right? Because I fundamentally believe that that's what drives agility. That is what drives clarity in your thought. And that is what really people see at the end of the day in the market as well, right? At some level, scale starts acting a little bit like gravity, right? When you become larger, then you tend to gravitate more towards the industry norm. For us, the consistent battle has to be how do we, sort of keep fighting against that to make sure that whatever we brought in as differentiators, we are doubling down on those and making sure that we do not, sort of stray away from that.
So, I think this question is not only laser focused to your asset management company, probably any entrepreneur or anybody who's starting up his entrepreneurial journey and seeing that to what extent his company or his startup is actually running, primarily will be facing the same kind of challenges. And he or she also has to work against the winds, against the norms, to keep himself on his toes and taking his business altogether to a different level. What Bajaj Finserv at such a macro level is actually doing in order to be one of the best leading AMCs of the country. So with this, we come to an end of the show. And to all the viewers who are watching this show, it's very, very important to understand how to be a pioneer in the industry, how to be a stalwart in the industry, what exceptionally you have to do things differently in order to be at the best. And I think most importantly, every industry has its own set of regulations and challenges. How within that ambit of those regulations and challenges, you have to take things forward, you have to innovate, you have to use technology at your doorfront, you have to use the basic philosophies which really leads to creating strong fundamentals and taking all together your business to a different level. So thank you so much. This podcast has exceptionally been of a different type altogether, where people of different genres would be coming together. They would be listening to this podcast. They would be having or taking a lot of insights from this podcast, understanding how at different phases they can scale up their business, they can take it all together to a new heights, and at the same time be the stalwarts of the industries as well. Thank you so much, sir, for being on the show. We are highly elated that you came all the way and you have enlightened the audience with your insightful discussion, and which will be of great help and significance to not only the investors but also to the entrepreneurs who are working at different fields altogether.
Thank you very much for having me here, and I really enjoyed our session together.
Pleasure is all ours, sir.